following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome all to another beautiful December 5th, 2012. And guess what? It is, every year on this date, it is Plague Your Workers by Dressing Like a Ninja Day. Actually, it is December 5th is the Day of the Ninja. I'm not exactly sure why it's December 5th, but who knows? But I guess this is, according to the website promoting the Day of the Ninja, it's Plague Your Workers with Ninja-esque, wear a ninja mask to work, wear a ninja mask out in the streets. I don't think we've had any real ninjas for about 100 years, but it's kind of the urban myth of the ninja, of the guy that could walk through walls, scale everything. And of course, we know it's all hokum. When guns came along, ninjas were pretty much over. No matter what they say, they could not be faster than a bullet. That was pretty much it. Yeah. Ooh, 10 Teenage Mutant Ninja Turtles, too. Ooh. Okay. So anyway, what do we have going on? Kind of an up and down day here. Mostly up after some rumors kind of ran the market that there was a deal in the works. I discounted that when I found out everybody in the house was leaving to go home. I don't think that there's any kind of deal at all. We popped a little bit up to 1412 after being down to 1398 on the S&P cash. And I'm just attributing this to market gas. Looks to me like there's a lot of distribution going on in the market right now. Maybe an attempt to keep this market up just for the next few days until the volume goes so light that there won't be any big movement. I've been pretty much believing that the Treasury has been extremely active in this market through the election. They pretty much gave up the day after the election, but it looks to me like they may be once again trying to manipulate the market, to manipulate the context of the debate on I guess our fiscal matters in the Congress. But didn't see a whole lot in there. There were a lot of BS rumors coming out when the market started heading up about some kind of grand deal, but nothing after that. And by about 1 o'clock, a lot of the House congressmen were saying that they were calling for airline tickets to get out of Dodge. So maybe a nice little bounce out of here. But the market is very short, so there's no big surprise in that. But we continue to see stocks every night taken out and, basically shot. And we'll go through a few of those today. Probably the only one that is doing extremely well right now is Netflix. We've seen a very engineered short squeeze. Don't want to be on the other side of Icon very, very much, but looks like a very engineered squeeze on Netflix, and that's probably going to continue. Anyway, 877-927-6648. You can call in directly and talk to me, your host, David White, on the Power Trading Hour if you want to talk about your specific stocks. Again, that's 877-927-6648. Before we get into much farther, I have actually two newsletters, a Tech Insider newsletter. It comes out every day on Friday, a longer-term investment newsletter, and a daily newsletter, which I have a lot of stocks that I have short right now. Even with this little bounce, they're doing okay. But we continue to see people trying to, I'd say, a fairly decent attempt to manipulate the marketplace. Most of my stocks are still down, the ones I had short, so I'm feeling pretty good out there. I have one that's not cooperating, but, 1 out of 6, probably not a bad ratio out here. And it's maybe 1% higher 1.5% higher, something like that, than when I shorted it. So no biggie just yet. But we're going to be watching this market. You need to be out somewhere around the 15th to the 18th of the month because the volume does get so slow that unless you are incredibly lucky, these stocks are not going to move too much. The B team comes off the bench. They're mostly told to make sure this market does not move. Every time it goes up, sell. Every time it goes down, buy. And try to reduce the volatility to nothing going into Christmas because I'm the head of this big street name firm, and I don't want any volatility until I come back. Same kind of thing happens the end of August when they all head out for the last few days or week before school starts in the Hamptons. It's pretty much a forgiven that we're going to have reduced volatility in the week coming up to Christmas and a few days later. I think that we have a number of things. Any one of them could cause a huge movement down in this marketplace, from the continuing strike in the Long Beach import terminal, and also just a handful of things. It seems to me like there's a lot of whistling past the graveyard, and for all the talk of the fiscal cliff, I see kind of a market that acts like we're just going to dare you to do something. I don't see, for all the things that could go wrong, the VIX at 1642 basically is telling everybody that everybody's not expecting anything bad to happen. This is where you get a market that has these big swings. But, I saw this intraday about every day in 2001. You'd see stocks that were off 40, 50, 60 bucks pop 25 intraday, and it was nothing. We haven't really started that kind of downtrend, but everything is out there to actually make it happen. I suspect that we're going to have fairly decent trading, and probably by March we're going to see California go belly up, and as one of the first states that can't actually make its paychecks anymore. And then at that point, the question is whether or not we're going to pay for the worst-run country or state in the union to continue their socialist ways. Of course, they've got Prop 30. A couple articles are already out today about how many California businesses are applying for business licenses in Nevada. So a lot of them are going to probably do everything they can to shift anything they can over to Nevada and start paying Nevada taxes, and probably moving out of California. They've had a exodus since about the late 80s, but I think it's Prop 30 is going to be even retroactive. I don't think a lot of people even knew in the upper income brackets that that's going to happen. I think that's probably going to be the impotence for the kind of like the days when everybody said turn off the lights when you're the last person out, when Boeing's plants in, I think it was Seattle, were going out of business. But probably going to see a huge change in also startups. My guess is that they're probably going to be moving to Las Vegas fairly soon. The tax rates in California, highest in the nation, going up, extremely going up here the first of the year, and the retroactiveness of Prop 30 probably going to be a huge shock. Don't think a lot of people actually follow that very far, but I think a lot of people are going to wake up real quick and decide to move as much of their business as they can out of California, and just kind of like Greece. So just circling the drain, and of course, instead of doing something to cut expenditures, they're more interested in raising more money. And with one-party rule on either side, you have no checks and balances. That's going to be a continuing issue. But I think that's probably the biggest thing in the first part of the year that I'm looking for. Apple a day, AT&T Investors Conference. We had they're pretty much announcing weak tablet sales and flat iPhone sales, really hammered Apple this morning. Let's see if I got a quote on Apple. It was down as much as $25. Looks like it's right back there again. It was down to what, $5.45 or so. Let's see, where's my Apple listing here? I changed them around thinking that it would be a great deal to do it. Now I'm looking for where it always is. Yeah, it was down to 545.59 is the low today, off 4.5%. There's some other things going on with Apple too. Some of the broker dealers see people with 50% or more of their entire portfolio in Apple, and they are changing from the regular 50% margin rates to 60, 70, and some as high as 75% in reductions. So a lot of people are going to be forced to sell Apple before the end of the year if they have high concentrations of Apple stock. Probably a good thing to do, but is going to put more pressure on it. We'll look at the chart later, but certainly it looks like Apple's headed back to 505 and probably before the end of the year. We looked at the ABCs yesterday. We'll look at them again today. But do not be surprised. But if you're wondering why Apple took it in the chin this morning, continuing to be one of the weakest stocks out there, and that is the AT&T Investors Conference, where they gave numbers on what was going on and the fact that iPhone sales are fairly flat. They're not seeing the huge drive that a lot of people would think, at least at AT&T, and people are extrapolating that to the greater side of the marketplace. Also, besides those margins, I've written in my Tech Insider newsletter over the last, 4-8 weeks, now starting to see that actually come out in the media every day, and they are talking about margins. I put some margin charts, and especially looking at some of the supply side stocks that go into the iPhone and the tablet, and showing how the margins are going to drastically drop over probably the next 6 to 9 months for Apple. They're no longer going to be printing money. For a while, they were enjoying those 65% margins that companies only like Intel were continuing to get, but Intel's started to fall, and Apple looks like it's a lot of their new products are going to water down that huge iPhone margins that they've had forever. So this, like all people, they eventually find some competition, and that's always going to hurt margins out there. But Apple's probably gone from the growth story to a income story, and that's why you're going to probably see a reevaluation of Apple over the months to come. And we're not going to see Apple TV till probably at least September. So being that delayed is the problem. Give me a call, 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And we're going to look at a few other stocks in the media out here. Although it's down today, soda, it's been one of these perennial, very short stocks. Everybody talks it up. One of the few things out there is when you just get lucky. And SodaStream has been lucky here lately. SODA is the symbol on it. They're the company that basically sells a big tank of CO2 to shove into your water-flavored drinks. I don't know. I don't have it. To me, the whole thing is a little weird, but maybe it makes sense. Maybe it's a nice product. The biggest thing I've ever looked at it for is if there's war in the Middle East, I want to probably short this. It's kind of a high flyer already. But they've been kind of lucky here lately in that they had a commercial, and I actually saw the commercial, thought it was kind of interesting. But they got lucky in that their ad was banned in the UK and in some EU countries because it, according to the UK government, which is not big on free speech, let's just say it as it is, the UK is getting rather draconian on what you can and cannot say. Some of the things make a little bit more sense. They have a little better laws than we do on libel. But for the most part, they've got kind of a Stalinist approach on hate speech. What they call hate speech means that you can't voice your opinion without going to the political re-education camp. They've got that some kind of belief, at least in ads. And according to them, it was denigrating other soft drinks because these unlabeled bottles just kind of exploded. I don't think the whole idea was that these drinks were going to explode. It was that you didn't have to use their bottles, and all the bottles wouldn't end up in the trash. And to me, the whole thing was, I didn't really think much about it other than it was a rather graphic, soda commercial. But they can't air it. But, of course, now being banned, everybody gets to watch it and watch it for free on YouTube. And they've had 1.2 million hits, and people watch it on Google. So, even though the whole idea was that they didn't want people to watch it, now it's almost a Pied Piper thing where they got people watching it, and SodaStream doesn't even have to pay for it. But, of course, the first thing that happens when people tell you that you can't do anything, they go right around it and they do it anyway. So I pee on those UK regulators. I've seen the ad. There's nothing in it that denigrates any other soft drink. It's just the same kind of little, it's like the BBC used to be a great news organization, especially during the Iraq War, especially in the early time. But they finally had to fire all the socialist commies that were running it and apologize. It was almost like an Al-Qaeda news outlet for a while. They've got a lot of problems over there with free speech and any kind of actual balance in their media. And it's a little nuts in this one. If you ever see that commercial, you're all going to go, what? Really? It denigrated? What other soft drink did it denigrate? As far as I can tell, it was a bunch of water bottles. But anyway, kind of weird. Gold tax selling. A lot of news out there lately about Goldman Sachs. Looks to me like Goldman Sachs and some of the others are putting a little pressure on gold and Paulson's ETF. I guess his fund, actually. He doesn't have an ETF. He's got the GLD. Looks to me like a little bit of a bear raid in gold. They came out today saying gold's going down. I think it's actually going down, too. I'd love it to go back down to about $1,200, where it should have a long time ago. And at that point, everybody's probably going to hate it, and I'm probably going to be loving it. I haven't really had a decent gold play. I thought it was probably going to come down. Missed it a little bit in my last trade on gold, but it was probably about 2 weeks early on it. You can't always be perfect. I've got a pretty good batting average right now, though, and I've been pretty hot hand the last 90 days, so I'm feeling pretty good about it. Long Beach, we talked a little bit about the strikes out there. A lot of businesses apparently are doing a lot of just-in-time inventory. A lot of whatever sold strongly around Thanksgiving, they order almost the next day. With that Long Beach strike, which about 40% of imports come through, they've moved a lot of them up to Oakland, the port of Oakland, and down to Mexico. The issue may be whether or not they ever get that business back again. But we're probably going to start seeing in the next few days, I would say that some businesses, especially clothing, a lot of things, lower end, non-high-tech products, except LCD televisions, are going to be hurt. So a lot of these clothing stores that sell the trendiest stuff are probably not going to get it. Anyway, give me a call, 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we're going to start looking at stocks here just a little earlier. Just wanted to check and see if there was anything else going on out here other than everybody getting ready for the zombie apocalypse happening, the 22nd, 23rd of December? I think that's when the zombie apocalypse / Mayan apocalypse / apocalypse, probably the Rolling Stones, probably coming out on stage. Probably the triad that's going to cause the world to sink into the black hole that everybody always predicts. I think we've got a challenging 6 months of next year, and I am bearish, probably will be bearish for a while. Just economic conditions. Right now, there's not a lot of great places to put money, and people keep shoving it in, not for the growth opportunities, but just because they actually think that the stock market would be safe. I think we've got several things out here. I think the crack in gold has got to be what everybody is looking at right now. That we should have come back and tested 1,200 or 1,250 on gold a long time ago makes me think that this is probably, we might have a nice little move back here in gold. I know a lot of people are thinking, it'll get back to 1,500 and that's it. My guess is if it gets going and really starts breaking down here fairly soon, we could see extremely lower, and a lot of people would think. But gold has very tight entrances in and out the door, and I would not be surprised to see gold trading at $1,450 one day and $1,200 the next, and everybody just too sick to ever think about buying it. At that point, you'd have to really have to have some, as they like to say in the Spanish lingo, cojones, to dive in at those levels. But you'd be surprised how easy that is to happen, at least in commodities. People hate them and love them, and unfortunately, we've had a love fest at this level for so long. It's either a big consolidation or big distribution. I see a lot of countries are going to have to raise money. We already see Iran. The only way that they can get anything done is actually through gold because of the restrictions. I think we may see a lot more countries like that, especially in the first part of the year. Greece, Spain, having to go to the gold. We're seeing peak production, at least in the United States. And I think I saw a list this morning of 5 other countries, all showing peak production in gold. It's just like crude. When everybody starts drilling for it and everybody hits oil, then the prices come down. And I was shocked. I'm going to go back again on the way home, but I saw a Rally gas station with $3.08 gasoline. I noticed the rest of the gas stations were printing $3.20. And if that's right, $3.08 makes me think that we may actually be seeing sub $3 gasoline here a lot sooner than I thought. I thought maybe it might take till March or so. But $3.08, pretty close to $3, if that's real. Like I said, the rest were $3.20. So I don't know if Rally has a special on gas today. Maybe somebody will call in and tell me what's going on in that. Maybe one of the $7 an hour widgets put up the wrong price, and when I go in there on the way home, it won't be $3.08. I'll be highly disappointed. Probably come back and it'll be $3.28. Probably put a 0 up there by mistake. Anyway, we're looking at SodaStream, and I think we've got this thing pretty much at a level that makes me think it may get up to $44 or so. But certainly looked like a fairly decent reversal signal today. No real volume in the last 4 or 5 days. But nothing like free advertising out here to take a look at. I wanted to go back and look at Apple real quick since we were talking about it. Look at the possible ABC down, which I showed the other day. But we've got, what else? Let me go to 1 year here on it. I think we'll pick it up a little bit better. And it does, and I want to show the expansion for it. And it pops right up automatically with my software that I wrote myself. If I break my arm patting my back here, let me know. But anyway, pretty good ABC up here. If you look at the bigger context ABC, which it certainly looks like, you got 705 for the high out here on September 21st. That would be your A point. Your B point comes in on November 16th at 505.75. Your C point at 594.59. That would give you a 0.44% retracement. I think we've got, you could probably call today confirmation. I could see this thing coming back down to 505 and maybe trading somewhere between 505, 530 and consolidate a little bit more before it gets enough energy to break 505. What is amazing is what this, if it does break that 505 level, it takes you right back to 395.27. A lot of people were actually bringing up, yeah. Let's see, what else is going on? Yeah, okay. I've got confirmation of 309 yesterday. That's interesting. So seeing gasoline prices really drop here. But what we're looking at in the price here is that 395.27 and ABC down. That would be rather interesting. What I was going to bring up was the charts that paralleled RCA in the probably from about 1920 through 35. A lot of people have put those out. If you just Google RCA Apple, you're going to see those same charts out there. But amazingly, how many charts actually look like this on monster moves. Now, Apple went up above 10,000% return. When you look at that low, I think it was March of It's got to be 2004 or 2003. You're going to see a low in there at about $6.57. And it tested a previous low on like 10% of the volume of a low, I think 3 months or maybe a year before. You can find that if you look back far enough, and tested on very light volume, maybe 25% or something. So you had everything you wanted in that buy signal back there in 2004, but you had a 10,000% move on this stock. At some point, you've got to know that the law of big numbers is going to kick back in. And, right now we're probably going to see a test tomorrow of that 530 level in Apple and try to make its way back down to 505. But when you get days like this, so close to the end of the year, tax selling also comes back up. And, a lot of people are sitting on some absolutely massive moves in Apple if they continue to hold it. And some people probably buying it all the way up there at ridiculous levels at 705 without waiting for the retracement. Those people are probably going to sell and try to take off anything that they made previously on it and pay a little less taxes out there. So we also have that 30-day rule where if you trade it within the last 30 days, which makes it a little bit tough to either get back into it or back out of it for the first 30 days of the year, or well, I guess the first day you could do that would be about now, right? We're about the 5th. So we're probably in that window. And just remember, I don't know how many people would be trying to stay out of it, but you can't buy it within that 30-day range at the end of the year. So always a issue with taxes in these that we need to be aware of. Wanted to look at some other stocks out here. Altera. I've always talked about Altera being the canary in the coal mine of the semiconductors. And why is that? They make chips that are programmable. They are not set in stone. And when you need to make a lot of products very quickly, or you're making a lot of prototypes for an item that's going to come out, you use these chips. You actually put them in a little machine. It will burn the gates in them, just like you made a custom chip. Of course, they're a lot more expensive than building a custom chip. But if you're going to make 5,000 or 10,000 of something, a lot of times it's cheaper to just go ahead with these Altera chips. I had 4 or 5 of these things on boards of products that I was a product manager and designed in. And these things, when you see the market really move quickly, you're going to see that kind of movement. Yes, kind of a EEPROM, if you know what that is. But this actually is the logic that goes into a lot of electronics. But Altera is that kind of canary in the coal mine. And normally when you see a bottom in semiconductors as a group, Altera and Xilinx are the first to run out here. This looks like another one that could be a massive ABC down. You only got a 0.35 retracement in the thing, and now it's already pulling back down. My guess would be to go back and test the previous low at $29.59. I would have liked a little bit more of a retrace to think this thing wasn't a big ABC move out here. But ZLNX, ZLNX, I think is the other one, if I'm right. Yeah, Xilinx. Xilinx actually looking a little bit better out of the two. But this thing also looks like it could go back to the $31.50 level. Not a lot of energy in the last 4 or 5 days as it's come up and rolled out here. So we'll continue to watch these markets fairly closely. But Altera, the worst of the NASDAQ 100 today as we speak, and off 3%, pretty good move out there. Probably the only thing is we don't have the kind of volume yet. Maybe we'll have it at the end of the day. We see some of these that are perennial shorts also running. Shield down pretty hard today, 2.5% on Sears. Another one of my Walking Dead stocks. We've got O'Reilly Auto Parts. We had Pep Boys come out and get slammed really hard. O'Reilly, let's take a look at that real quick and see what we're going on there. We were talking, I guess Monday, probably yesterday also, about all these automotive stocks looking rather poorly. We were talking about, if I got it right, ORLY, right? Oh. Worst part is I've got a Microsoft standard keyboard. And coming in here and tapping on these flat Rode keyboards, always a little different for me every day. But when we come in here on O'Reilly, this came right back into the gap and touched it and has rolled right over. We've seen so many of these with high volume lows not really come back, test the previous low. This one is another one of these where you really have to wait, at least for a long term, to see that this thing tests $75.61. That was the June 27th low, $57.61, 12 million shares. It got a high volume low out there. It's going to come back down. It's going to phone home, say, hey, what's it like down here? It's $75.61. Maybe everybody shows up to the party. Maybe no one shows up to the party. But 12 million shares, probably very decent support. But if you just look at the shows for the last couple of days of these stocks that have been extremely weak in the auto parts and even the automotive sector out here. But when we look at Pep Boys, I think we looked at that yesterday. Pretty good indication that a lot of these stocks were going to be very weak for some time to come. What else do we have out here that I wanted to look at? Let's look at the winners out here and be a little positive for a little while. STX up about 5%. RIM, again, just a lot of these are in the throes of short squeeze hell if you are short these things. Green Mountain Coffee Roasters up 3%. MCP up almost 3%. Micron, probably the first nice little bounce out here in Micron, of course, up against the downside from Apple out there not doing much. Network Appliances up about 2.5%. NTAP, PCAR 2.2%. So not a lot in there. We're going to let me go ahead and get my tests here. Date modify. There we go. I'm going to start looking at some of these other stocks and how they looked. SBAC Communications, taking a close look at this thing right here. Another one that looks like maybe it's made its high out here today and making the confirmation. SBA Communications, and what we're looking at in this one is this high at November 7th, $68.68, 2.5 million shares. Tried to go above that for about 3 days. We had 1.6, 700,000. And just under 1 million shares yesterday. It closed back below that low, but no sign of strength at the highs. Pretty good indication that you're going to come back the other side, test the previous low, which in this case is the November 15th low at $63.85. 1.9 million shares, so not a monstrous high volume low out here, but certainly a stock to keep an eye on. There's one, I don't trade any of the pharmaceutical stocks out here. Let's see. Let me go ahead and close that. Pharmaceutical stocks. But we've got one here. I don't know a whole lot about it, but certainly if you're interested in trading pharmaceutical stocks, looks like a ABC down is developing in this one. PCYC is the symbol on this thing, but another real nice setup out here. Gap down on huge volume. It's come back, filled that volume. You've got a 45%, 46% retracement in this thing, and that would set you up for an ABC 1-to-1 down to $31. Don't know a lot about this, but if you know pharmaceuticals, I stay away from them myself. Not a bad looking ABC, or at least a test of the low out here coming.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And I want to thank Tom O'Brien for checking in the den and a couple others out there. Apparently we're having a gas war. I can't remember gas wars from like in the 60s. So it's kind of tough to think about actual gas wars going on out here. See what we have going on. I think probably if my producer can type a little faster, I have almost an idea what he's going to type. Sounds like a blizzard in here. I had to turn the air conditioning on in the studio here. Hopefully he'll go in here, sneak around the camera. Oh, there he goes. There he is. He's trying to hide. I caught him. But anyway, thanks for Tom for going ahead and coming into the den. Apparently we are having a little gas war down here from some new gas station, I guess giving away coffee and some other stuff. Oh, it's a Thornton's. Donut place, huh? I think that's what they do. Anyway, I'll still get gas at $3.08 a gallon today and be happy since I drive a giant gas hog. But at least I was afraid that I would not get it. By the time I got back, it would be gone. But I don't know. Somehow, it's like you win the lottery when gas goes down. I don't know why everybody thinks about it. Had a question in the den. We still got a couple minutes. You can give me a call at 877-927-6648. And check out the front page of TFNN. And take a look at those Tiger dollars. Also, a great deal on those. In fact, you probably feel like if you won the lottery, if you get a few Tiger dollars out there, and give a little wet the beak of the people that ring the bell out there in front of the Kmart and Walmarts out there. Just get, I think, what, up to 10%? I think that's what it is. So not a bad deal on that, too. So anyway, we've got a question in the den here, which is Abercrombie and Fitch, whether or not it's a possible short out here. One thing that does happen is a lot of people holding stocks after this time or selling them for tax reasons. A lot of times you have a big winter. A lot of people won't sell stocks into the end of the year. And Abercrombie and Fitch, symbol is ANF out here. One thing you don't like is it did bust above previous levels. It had huge volume. Is it probably coming back down to that $40, $39 level? Yes. Is it going to do it before the first of the year? Normally you want to see stocks already in a downtrend by this time. And, you know, you've got about 10, 13 days, not trading days, but 10 or 13 days to see this thing crack. My guess is that while you might get 50% retracement back to $40 or $39, it's about $3 in this thing. There's probably, I probably have put in this last 5 days in my newsletter stocks that are so much better than that. I'll give you a little example of one. See how it's doing here today. But to me, there was some just outstanding stocks short out here. Let me move my little thing back here. I got a minute here so we can take a look at it. But we had just an excellent entry on one of them, and that was UA. And we were short this one. I had it in the newsletter for $55. But this one's got a nice movement out here. But again, that same pattern, huge volume down on UA, and that was on the 25th. Came in with almost 7 million shares. You came back into it. It touched right into that gap, and you kind of had to take a little flight of you know, a leap of faith out here. But had a short for $55 in there. This thing's moving back down. Pretty good opportunity to see this back at least 48.90 back into this lower gap as this thing makes an ABC down. Maybe a whole lot more. I'd like to see a little bit more volume. But like I said, got, you know, about, 10, 13 days, something like that, to see these come back in. But I'm looking for these ones that came down on heavy volume, not that went up on heavy volume. Anyway, there are a ton of them out there. You don't have to worry about it.